Welcome to Market Brief After Hours. It has been another incredibly volatile session across global markets today. Investors are trying to navigate a maze of geopolitical uncertainty, specifically surrounding the U.S.-Israel conflict with Iran, and we are seeing some absolute whiplash in energy prices as a result.
Whiplash is the perfect word for it. The trading session was incredibly unsettled. We saw crude oil pull back sharply after a massive surge earlier in the week. On one hand, that easing of energy prices helped cool off some immediate inflation fears. On the other hand, it didn't completely stabilize market sentiment because the underlying geopolitical risks are still very much in play. There is still a tremendous amount of uncertainty regarding shipping flows through the Strait of Hormuz.
Let's get right into the key takeaways and how this played out on Wall Street. The major indices really struggled to find a clear direction today. The Dow Jones Industrial Average slipped by 0.07%, closing at 47,707.
And that close doesn't tell the whole story of the day. The Dow was actually down nearly 300 points earlier in the session before it managed to trim those losses as crude prices retreated. It's very reminiscent of Monday's dramatic action, where the Dow erased an intraday drop of more than 800 points. The market is trading entirely on energy headlines right now.
We saw similar choppy action across the other major indices. The S&P 500 declined 0.21% to close at 6,781. It had dropped about 0.5% intraday before recovering. Meanwhile, the Nasdaq Composite managed to just barely hold flat, edging up 0.01% to finish at 22,697.
The Nasdaq's slight gain is a classic sign of investors rotating back into tech shares when broader economic fears flare up. Tech initially declined early in the session, but as those crude prices fell, it helped stabilize the broader sentiment, allowing those tech names to recover and flatten out by the closing bell.
Let's talk about that drop in oil, because the catalyst was quite unusual. West Texas Intermediate futures fell 11.94% to settle at $83.45 per barrel, and Brent crude declined 11.28% to close at $87.80. But at one point, prices had plunged more than 17%.
Exactly. Crude had surged to nearly $120 a barrel earlier in the week, so the market was already highly reactive. The massive 17% intraday plunge was actually triggered by a social media post claiming the U.S. Navy had escorted a tanker through the Strait of Hormuz. That post was later deleted, and the White House had to officially clarify that no such escort occurred. Once that clarification hit the wires, oil rebounded slightly from its lowest levels of the day. It just goes to show how jittery traders are. Conflicting reports about tanker escorts and potential Iranian mines in that critical waterway are keeping everyone on edge.
That jittery energy market actually provided a massive boost to European equities today. The Pan-European Stock 600 climbed 1.8%.
Yes, the sharp pullback in crude was a massive relief for Europe. When we look at the specific countries, the rallies were quite robust. Germany's DAX 40 advanced 2.4%. Italy's FTSE MIB jumped 2.7% after hitting a 3-month low just the previous session. France's CAC 40 rose 1.75%. The UK's FTSE 100 gained 1.59%, and Switzerland's SMI added 0.5%.
The irony is that while German stocks rallied 2.4%, the actual economic data coming out of the country was quite bleak.
It really highlights the disconnect between equity markets and the underlying economy right now. Economic data showed softer momentum in Europe's largest economy. German exports fell 2.3% month-on-month in January, which was worse than expected. But the real shocker was imports, which plunged 5.9% to a 17-month low of 109.2 billion euros. That is a glaring signal of weaker domestic demand within Germany. But today, the relief over falling oil prices completely overshadowed that sluggish economic data.
We are going to take a quick break, but when we come back, we will dive deep into the currency markets, check in on some wild moves in precious metals, and highlight the biggest market movers of the day, including a massive after-hours surge for Oracle. Stay with us. Welcome back to Market Brief After Hours. Before the break, we covered the choppy equity markets and the wild swings in oil. Now let's transition to Forex, because the currency markets are painting a very interesting technical picture right now. Let's start with the euro. Euro USD closed at 1.1611, down 0.21% for the session.
The euro is under clear bearish pressure right now. It traded between a high of 1.1667 and a low of 1.1606. Technically speaking, it has slipped below several key moving averages. The 50-day simple moving average is up at 1.1759. The 100-day is at 1.1695, and the 200-day is at 1.1672. Because all of those are positioned above the current price, it creates a heavy ceiling. If we see a decisive break below the psychological 1.1600 level, it could really open the trapdoor toward the 1.1550 area.
The British pound is facing a similar uphill battle. GBP USD finished the session at 1.3418, down 0.19%.
It is struggling. The pair hit a high of 1.3484, but faced renewed selling pressure when it couldn't sustain gains above that mid-1.34 region. It's currently trading below its 50-day moving average at 1.3529 and its 200-day at 1.3444. The one saving grace is that it remains marginally above the 100-day moving average, which sits at 1.3399. That 100-day mark is going to be the critical technical level to watch to determine the next directional move.
On the flip side, the US dollar continues to dominate the Japanese yen. USD JPY ended the session at 158.05, rising 0.26%.
The bullish tone here is undeniable. The pair is holding comfortably near multi-year highs. The technical structure is incredibly strong. The current price is well above all the major moving averages. The 50-day is down at 156.15, the 100-day is at 155.55, and the 200-day is way down at 151.40. This setup reinforces the broader uptrend we've seen since late 2025. Buyers keep pushing it closer to recent highs, and the next significant upside target is that multi-year high near 159.00.
We are also seeing strength in the Australian dollar. AUD USD closed at 0.7119, gaining a solid 0.63% today.
The Aussie dollar is extending its rally toward recent highs. Similar to the USD JPY setup, AUD USD is trading very comfortably above its major moving averages. You have the 50-day at 0.6931, the 100-day at 0.6747, and the 200-day at 0.6640. If it can break above the recent swing high around 0.7150, we could easily see it pave the way toward the 0.7200 region.
Speaking of strong uptrends, let's briefly touch on precious metals. Gold settled at $5,197, up 1.1%, and silver closed at $88.41, rising 1.65%. Both are trading well above their 50, 100, and 200-day moving averages.
The bullish momentum in the metals market is persistent. Gold saw renewed buying interest after a brief consolidation phase, with the next major upside target being the record peak near $5,400. Silver is behaving similarly. Despite some rejection near the $90 level today, buyers maintained control into the close. If silver breaks $90.01, the psychological $95 area is the next logical step. The geopolitical uncertainty we discussed earlier is absolutely providing a tailwind for these safe haven assets.
Even cryptocurrencies caught a bid today. Bitcoin climbed above $70,000, rising 1.5% to around $70,055.
There was some optimism circulating that the conflict with Iran could move toward a resolution, especially following comments from President Trump signaling the conflict may end soon. Ethereum and XRP also posted modest gains of about 0.8% and 1.2% respectively, though traditional crypto-related equities had a much more muted reaction.
Finally, let's look at the specific market movers making headlines today. BioNTech had a brutal session, with its U.S.-traded shares plunging more than 17%.
That was a tough one. The biotech firm announced that its co-founders are stepping down, which always rattles investors. To make matters worse, they reported a fourth-quarter net loss of €305 million. The combination of leadership uncertainty and poor financial performance triggered a massive sell-off.
On the positive side, SolarEdge Technologies jumped nearly 10%, and Vertex Pharmaceuticals rallied about 8%.
SolarEdge benefited directly from an analyst upgrade. Bank of America moved the solar company from underperform to neutral, and the market clearly agreed with that reevaluation. As for Vertex, their 8% gain was driven by science. They announced that a drug successfully met its goals in a late-stage clinical trial for IgA nephropathy, which is a chronic kidney condition that can lead to renal failure. Positive late-stage trial results are always a major catalyst for biotech and pharma stocks.
The biggest story, however, might be happening right now in extended trading. Oracle shares jumped roughly 9% after hours.
Oracle delivered a massive quarter. They beat earnings expectations and, crucially, lifted their revenue guidance for fiscal 2027. Their cloud revenue specifically climbed an impressive 44%. But the most staggering piece of news was their announcement to raise between $45 billion and $50 billion to expand their cloud infrastructure capacity. That is a monumental capital raise, and it signals immense confidence in the future demand for their cloud and AI services.
It certainly paints a picture of a tech sector that is still aggressively investing in growth, even as the broader market navigates these geopolitical landmines. With crude prices still elevated compared to earlier levels and key U.S. inflation and labor market data approaching, it feels like traders are going to remain highly cautious.
Caution is definitely the watchword right now. Until we get greater clarity on the geopolitical front and see a definitive trajectory for energy markets, this elevated volatility across global financial markets is going to persist.
We will be tracking all of those developments closely as they unfold. Thank you for joining us for this comprehensive breakdown of today's market action. If you find this useful, please follow Market Brief after hours.